welcome to yet another episode of this podcast series, which is titled The Many Aspects of Financial Inclusion, where we explore the challenges and opportunities of the financial inclusion space. So my name is Sunil Bhatt, and I work as an associate partner in Microsoft Consulting, or MSc. And I have been closely associated with the Financial Inclusion Lab, which we jointly run with CII Co of IIM Ahmedabad. So the Financial Inclusion Lab is an accelerator program with CIE, where MSc supported and incubated close to 50 startups over the last 5 years. And these startups have built solutions primarily for the Bharat segment. Financial Inclusion Lab is supported by various international donors, and some of the prominent ones include JP Morgan, Bill and Melinda Gates Foundation, MetLife Foundation, Omidyar, and others. So joining me is my colleague Anil Kumar Gupta, who is a partner at MSc and leads digital financial services at MSc. Welcome, Anil.
Thanks, Sunil.
Yeah. And in this podcast, we'll dive deep into the startups and founders' journey and try to answer some of the most pressing questions on how to create value for customers and achieve impact and scale. So we may not have all the answers, but the idea is to provide a glimpse of what it takes to build startups for the Bharat segment. So today I'm very excited to welcome the founders of Roopya Money, one of our cohort startups, Raman Vij and Sudipta Ghosh. So welcome Raman and Sudipta for this podcast.
Thank you so much, Sunil. Thanks for having us here.
Yeah, thank you, Sunil. Sure. So Roopya is a lending SaaS platform which provides technology solutions to lenders and DSAs. And it's very beneficial for small and mid-sized lenders to use cutting-edge technology in their business at a fraction of cost. Right? And this webinar or podcast will largely focus on the innovation in the lending ecosystem in India. So recently, investment banking company Avendus Capital came up with a thought paper on MSME lending, and it estimated an astounding credit gap in the MSME sector, and the number stands at $530 billion, right? And the report further says that out of the 64 million odd MSMEs in India, only 14% have access to formal credit. So when you compare this with the 2019 UK SINA committee report, which was constituted by the Reserve Bank of India, it's almost double. So the SINA committee report said the credit gap was around 250 to 300 billion dollars, right? But whatever the numbers, I mean, these are huge numbers, and most of the formal lenders are struggling to meet this gap. And it's companies like Roopya Money which are sort of supporting to bridge this gap. It's a very challenging problem statement, and we are proud to be associated with Roopya Money and the startups like them who pick up such challenging statements. So over to you, Anil, to understand the journey of Roopya Money, their vision, and how do they want to support the lenders to address the credit gap? Yeah, thank you.
Thanks, Sunil, and welcome again, Sudipta and Raman. Thank you for your time, and I think you had a roller coaster ride so far. So before I begin, I think Sunil spoke about, like, he used a term lending SaaS as a service, lending SaaS platform. So I think let me start with that. What is lending SaaS before I really try to understand that what has really gone into it. So any one of you would like to just explain to the viewers that what is lending SaaS?
Sure.
Yeah. Thank you so much, Anil and Sunil, for having us here. So the lending have two aspects. One is the credit and one is the technology, right? Because with the changing times, technology is playing a very important role in the lending process. So lending required a credit guy who can underwrite the application, and technology which can shorten the time frame, bring customer to the forefront, and with the alternative data plus technology, underwrite and give the loan to the customer. So these are two things. So we, as a Roopya Money, saw that, so we thought that for a technology, we need to provide some solution so that a credit guy can immediately use a platform and start underwriting. So that SaaS is a technology part, software as a service. So we give a technology support to the credit guys so that they can underwrite the application, customer, and give loan efficiently. So that is the SaaS part in the lending. Yeah.
Fantastic. So that helps, because there would always be a difference of opinion that what is a SaaS and what is a lending SaaS. So I think it helps all the viewers and listeners. So just like let me begin with some basic things, in the sense like you have come so far in this journey, and there must be a background to it, that what you have been doing in your previous avatar. So I would like to know a little bit about both of you in terms of what you have done in your previous avatar.
Right. So I'm a banker by profession. I spent 12 years in the banking, and then I saw that there's a evolution of technology and data is happening in the banking, and I joined the credit bureau. So I was part of one of the leading credit bureau in India. I worked there for 8 years. So my entire career so far was into the credit space, particularly seeing the customer doing underwriting, both in physical form also at some point in time when we started, and slowly, steadily moving to the digital. And then through a bureau from the other side of the table, have seen how the data and tech companies are helping the bankers and lenders to do underwriting better and efficiently, and bring down their cost of acquisition, bring down their NPAs, and basically bring efficiency into the entire ecosystem. So that is what I have been doing. So yeah.
Thanks, Sudipta. Over to you.
Yes, yes, thank you, Anil. So, same here. For example, I spent significant amount of my time, my professional life in lending space, and what I have seen is that there's a huge gap, like you also mentioned, is that there is a huge credit gap, and we used to, when 10 years back we used to be in lending space, we saw that things were done manually. People spent huge amount of time collating and scavenging for data, and credit guys used to struggle for making sense out of the data. In my last 10 years of career as as part of one of the largest NBFCs, we have seen that things have moved and graduated from manual to digital today. So I have seen the journey of how loan used to take like 7 days, 8 days, 10 days. Now it's happening in 15 minutes. So that journey I have seen. And in Roopya, what we are trying to build all those intelligence, so that the knowledge which I and Raman has gathered over the last 10, 15 years, we can take it to the masses, take it to all the mid and small size lenders, so that they also benefit from our knowledge and our experience which we have gathered over the last 10, 15 years. So that's about it, Anil.
Thanks, Sudipta, and thanks, Raman. I get you that you have been a kind of a career lender or part of the credit bureau, and I think that was the reason why probably you started the Roopya Money. Was there anything else, like besides that, your background that set you to launch Roopya Money, or there was something else besides this? Or you felt the need, there is a need in the market, or like maybe you spoke to a few customers or you spoke to a few lenders and they said that, yeah, this is really missing piece in the overall puzzle of lenders?
So let me take this question, Anil. So when with our interaction with all the lenders, particularly mid and small size lenders, what we understood is that, so if, just to give you a number, in India there are total around 1,200 lenders, active lenders, right? And 95% of these lenders, they don't have access to, when we speak to our customers, they don't have access to latest technology stack, they don't have access to data, they don't have access to analytics, and so on and so forth. Only the few top lenders will have that. Now, when we spoke to these lenders, they unanimously told us that if we don't have this tech with us, if we don't have this data backbone with us, we won't be able to bring down our cost of acquisition, or even say underwriting cost, the NPAs, and even early warning signal things. Now, we thought there's a huge gap in the industry. Now, based on our experience and our learning so far in the industry, we should build a platform which is easy to use for all the mid-size, even large lenders, for example, the RRBs, the MFIs, the lenders whose typical book size 500 crore, 1000 crore, 1500 crore, they should be able to use the stack. And like Raman also said, it's in the form of a software as a service, which means they don't have to put anything upfront, simply sign up and start consuming. The end objective is that their prospective customers who are mid-sized borrowers, and there are, by the way, around 400 million such borrowers in India. And out of that, approximately, I'm talking about retail borrowers, out of those 300 million borrowers are currently underserved, which is typically the LMI segment, even tier 2, tier 3, even tier 1 also, we have got segments. Now, these borrowers are being served by these 1200 lenders who don't have access. So in our experience, we saw this gap. And we thought that based on our experience of 10, 15, 20 years, we develop a platform where these 1200 lenders can tap in, use all the intelligence and data and the analytics already built in, and they benefit these ultimate borrowers so that their interest rate comes down, they get access to credit, and all the government schemes, all the credit policies which are being made, those are passed on to the borrowers who are in need. That's the idea.
Fantastic. So I have one of the very tough questions for you. It's a question is very small, but it's very tough. Can you really explain your business to a 5-year-old kid? Raman, would you like to take a step?
Yeah, so we basically help a bank lender, basically person who gives loan, to identify to whom to give loan, how to give loan, and how much to give loan. I think that is one. So anyone who want to give money, we help those people to identify these three things, and of course, how efficiently it can be given loan. Yeah.
Awesome. Actually, that is awesome. So it's because see, we use a lot of terminology in our normal life, and sometimes people find it difficult to understand that what is that you are trying to do. So that was one of the questions around that. So thank you for answering that, and I think that makes a lot of sense. So let me move quickly to the second part of this conversation. So we have been talking about, say, lending SaaS, which is software as a service, and you have done you have done tremendously in this space, and you have been interacting with a lot of lenders, those who are providing these services. So let me begin with a core question of that. How did you approach the building of SaaS platform? Because it requires a lot of effort to build that platform. So that is first part of it, that how did you approach it? And second is that we know that this lending process, you know that it is varied in the sense one lender is different as compared to the other lender. So how did you come across a universal solution or a customizable solution so that many lenders can use it in a classic sense of software as a service?
Right. So right, we actually, so since we are from industry and of course from the bureau background, we were already in touch with hundreds of the lenders and different type of lenders. So microfinance lender, then a retail lender, and then a commercial lending. So these three are the broad aspect of the lending. And if you see in India, the structures are built like this only. So microfinance work in the different fashion altogether, wherein the data is open, right? So one MFI can see the data of the other MFIs through a bureau when they underwrite. Then the retail segment who operates in the multiple product, which is individual loans. So they have a different way of using the data of other lenders to underwrite the customer. And then there's a commercial, which works in the broadly two manner. One is, of course, the total borrowing of a particular company, and outside that prediction of default basis the score plus the CRISIL and ICRA rating also on the corporate side. So we saw that there's a different behavior of the borrowers also, and different way of lending and underwriting those customers also. So that was confirmed that we will build a platform which will have dimensions in all these three, because that is how the platform will help them to consume the data. The data will be different, borrower will be different, so technology has to be different. So building a SaaS platform, these three different type of borrowers was a challenge, and we then created our platform with the pipeline model. So one pipeline means one product. So in a SaaS, you can create a multiple product pipeline. When I say different product pipeline, so one is say for a microfinance loan. So microfinance, you will capture the different type of data from the borrower. Then there's a retail loan. So retail loan will have a different journey. So for example, in MFI, probably there's a physical touch also. So there will be a different type of data collection. For retail borrower, there will be totally DIY, do it yourself journey, where a lender is educated, a borrower is educated, and they will fill in their data themselves, complete the journey. And then there is a third type, commercial customer, wherein data will be like some part of data will be filled by the borrower and some part will be the lender. So these three pipelines. So in our SaaS platform, we have given these three important dimensions on the platform to create the pipeline. Second, the data which is coming through a bureau should also have a different data backend. So we have given that solution also in our platform, wherein the data consumption is also different. So then once customer comes on the platform, then different business rule engines are required. So in a platform, you can create, say, 4 or 5 different business rules engine also. It can be multiple also, but primarily for these three type of borrower, 3 business rule engine can be created. Business rule engines are basically credit policies of a borrower or lender. So lender creates a credit policy. So this SaaS platform helps multiple products, multiple policy, and multiple users in the lender's credit, say different type of different people in the credit, they use that platform and underwrite the application. So yeah, so that is what we have given to us SaaS, which is a multi-product, multi-BRE, and multi-borrowers journeys here.
So Raman, one quick question or clarification here, that you said there are 3 product pipelines that you have created, but if there is a variation in those product pipelines, for example, MFI does group loan as well as individual loan. So will you be able to have a new pipeline, or that will be a subset of this same pipeline?
Right. So type of loan. So one type will be one. So if an individual JLG loan, then this will be one pipeline. Then there's a group loan, there will be second pipeline. But these are linked with the customer database. So one customer will have multiple application ID. So today customer is coming for one product. That same customer will come for some other product, and he will get into the different pipeline. But at a parent ID will be the same, so that you can control the customer. Yeah.
So it will be something like, say, banks have a unique customer ID, then you have different product attached to it. So probably something of that sort you have built in your platform.
Once customer comes in, a parent ID is created, and then he is applying for one loan. He'll get into the one product line. Same customer, probably from a lender's perspective, they want to give a more loan, or they want to give us a retail loan. Then the same customer will go for a retail pipeline, and take a retail loan. So parent ID will be same. So from a customer database, if a lender want to see what happened to this one customer, he can see the overall end-to-end journey of the customer on the platform. So for last 5-year journey, for example. So first he came and the behavior also, that he has taken one loan and behaved in this manner. Then he taken the second loan, different type of loan, and behave in the second manner. And probably at some point in time, if we become the sole proprietor or partnership firm as a then also in a commercial, how he behaved. So overall journey from, say, one product to second product to final product.
That's very interesting. And I know that you have already tapped into a large pool of such lenders, because there are thousands of such in the market. How has been their experience? Any customer feedback that you have from them, that how is it working for them?
Right. So the credit guys and the business guys, they know their business very well. Now they are at one level of their working. So for example, they are doing physical and they are also doing, say, semi-digital. We are helping them to sign up on our platform in 5 minutes. So just imagine a lender who have 80 branches in India. He signed up on my platform in 5 minutes, created the product pipeline in next 10 minutes, and BRE, and start operating. and his entire 80 branches go digital in next 1 hour after sign up. That is the beauty of the product. That is the expertise we bring in the product through SaaS.
Can you unravel? Actually, Raman, probably I'll ask you to unravel that. How can they sign up in 5 minutes? Because this is very interesting.
Yeah. So, for example, a lender say that I want to become a digital. I have decided that I will become a digital now. I was doing physical. Now he'll come to us. He has to sign up on our platform, which is a Roopya.money. There's a sign up option. He will sign up on the platform as a credit institution. So there are two types of signups. One is the LSP and second is the credit institution. He will sign up on the platform as a credit institution. Once he sign up on the platform, he will get the dashboard ready and CRM ready. In CRM, he has to create a product pipeline. So, so he will, and before that, he will create his organization also. For example, he have a sales role, then he have a credit role, then he have a operations role. So 3 roles he have created, and he makes the users on the platform, user 1, user 2, user 3, give them access of, one is a sales role, second is a credit role, and third is an operations role. This all happens within few minutes once sign up happens. Once that sign up happens, then he creates the product pipeline. Product pipeline means, for example, he is operating in a personal loan. He set up a personal loan pipeline. There will be a journey fixed to that. So there are 15 data points are required, a customer journey, customer facing journey. That is also inbuilt in the platform. So he create one product pipeline. Once he create the product pipeline, now he required a UTM, which is a unique marketing link or say QR code to source the customer. Within few seconds, he can create the source links also. For example, he is operating through a branch network. So branch one QR code, he will print that QR code and put in that branch. Any walk-in customer will come, scan that QR and apply for a loan real time. Once he apply for a loan, this loan directly goes into the sales queue. Credit report check happen. Credit report check will happen, and the basic, say for example, the customer minimum to have say 600 credit score. This customer will pass through and go to the sales queue. So first refine will happen through BRE, which was the hard KPI, a minimum bureau score of 600, minimum salary of say 20,000 rupees, staying in own house or a rented house. For example, these 4 or 5 parameters, which are the hard KPIs of a bank, it will refine automatically in the system. It will go in a credit sales queue, and sales guy will call the customer from the system itself, and then he says, is it okay to proceed? Verify this information because the customer himself will fill the application. Then he move that application to the credit queue. Credit guy will see it. If he required more information, he will again ask for the more information through system only to sales guy. Sales guy again pick that information. This entire flow will happen in the system itself, and he collect that information and underwrite the loan and say sanction a limit of 50,000 rupees personal loan. Now from the system itself, the customer will get NASH and agreement on an email. He will sign NASH and agreement. In next half an hour and 1 hour process, he will get the money in account. So entire process flow will happen on the system itself. So one, sign up. Second, the organization mapping, which is sales, credit, and operations. Third, a product pipeline created. Fourth, customer journey created. Fifth, the mode where the customer will apply for a loan, which is a QR or a unique link. That's it. Journey is completed, and within 6 hours, we have seen in one of our lenders, within 6 hours, he is able to disburse first loan after sign up. So the entire organization of 80 branches is live or digital on the platform. Yeah, and 5 minute sign up, 6 hours journey.
Yeah, this really sounds magical. Actually, thanks to a lot of digital infrastructure that we have in India now. So I think that is really awesome. So that takes me to the next question, that how your business is doing, because this is very fascinating. I'm sure that there are hundreds of such lenders or DSAs who are interested in taking this up. So how has been business, and And do you see that it's making enough money for you, or do you see more avenues which will be opened up over a period of time?
Sure. And so you'll be very fascinated to know that we don't have sales vertical in the company. We don't have sales vertical in the company. So
you don't need sales. There is a lot of pull actually. This is what you are saying.
There's a lot of pull. I think the credit goes to the vision and the implementation, and of course the entire product tech team and our team members. So our vision was that let us empower the existing lenders with the data and tech solutions, right? Those data and tech solutions being used by the top private sector banks, those tech and data solutions to be given to the mid-size lenders so that they can reduce their cost drastically. So they should not worry about paying money. So for example, we are charging only 100 rupees per application processed on our platform. If somebody is doing only 1,000, he's end up paying only 1 lakh rupees to us. So our value proposition to the end lender is that you need not to worry on the cost. Second, you are getting efficient tech and data platform. So your efficiency will further increase, which is eventually your NPA will decrease. Eventually your cost of acquisition will decrease. So he would be happy to pay us in that way. So it's a pull product, then a push product. So what we have today in the market is all push lending infrastructure products, but they don't help lenders. I mean, they of course help lenders, but we directly want, so our benefit is direct to the lenders on day zero itself, without any capex investment on us, only 100 rupees per application. If you are processing, so I'll give you example. For example, one scorecard, it requires minimum 15 to 25 lakh. Let me explain to the viewers what a scorecard is. A behavior of a customer. That's minimum. One scorecard cost 15 lakh rupees. We are saying to our lenders that you need not to worry on this heavy lifting cost. We will do that heavy lifting cost for you. We will do all integrations for you. We will manage the entire tech platform. We will take care of the cloud cost, SMS, email cost. You just log in and start using it. Yeah. So that is the reason there's a pull. And we are so we are onboarding. So last month we have onboarded almost 12 customers on our platform, and we still have a list. So we are trying to fulfill all that orders in our hand. Yeah.
Just one connected question, if I'm asked. If you could just tell our viewers on how your platform sort of assists the assisted platforms. Say, for example, where the customer himself or herself is not able to fill the application form, there would be many such customers, right? We call them neo-literate of sorts. So how do you kind of support your lenders there?
Right. So the digital journeys are there. It doesn't mean that it is DIY. So digital journeys are there, which means FOS guy, feet on street, can go and open it on his tab or say mobile phone, iPhone, on a smartphone. He just put his phone number and take his consent and fill the data there and then. And that data will go to the credit guys and telecaller guys at the backend, at the centralized system, and work will happen. So yeah, so DIY is for the retail who are like more educated and know how to use the phones. But for the other segment where physical assisted journey is required, yeah, they are there.
Okay.
So you have both the options here actually.
Both the options
That's
are
very
there.
interesting. Yeah. So let me just turn to Sudipto, because Sudipto has very recently he has been with NBFC, a very large NBFC. I'm pretty sure that it must not have been a very smooth ride for Roopya Money, and there must be still some apprehension of the challenges. If you talk about the NBFCs, lenders, which could be even DSAs, those who are generating leads. Any specific challenges that you face, or probably for them you don't have a right solution and it's only a process or it's a process of time which will take, and then eventually they will start becoming digital? Do you have any insight based on your extensive experience on both the sides? Because you have seen both the sides more closely than anyone else.
Thank you for asking this question. It's an important question, Anil. So we have seen initially when we started this journey, Roopya, we saw some, so it's mostly about behavior. So I'll tell you, when we onboarded our first few set of customers, the first customer probably, when we went to the customer and said that you can sign up in 5 minutes, I mean, I'm talking about the lender, he did not believe. I mean, it's like calling an Uber from an app and the vehicle comes, right? The lender did not believe that, can I sign up in 5 minutes, start creating the pipelines, onboard my borrowers, and disburse a loan in, let's say, 1 hour or 2 hours. We had a hard time there. Now, the first two customers are difficult. Then we actually sat with the customers, actually told them that, yes, you can sign up. There is a provision, I mean, given the tech stack built over the last few years, you can actually verify a customer, estimate the income, do the credit scoring and the underwriting, absolutely whatever is needed to underwrite a loan, I mean, including e-NACH agreement, everything, the whole stack can be done in less than half an hour and you can disburse. And you rightly said, it is actually magical. And once we onboarded the first few set of customers, then slowly the behavior and the word of mouth spread. So it's the initial challenge were more about customer behavior, the lender's behavior of the change, that the credit person, the sales guys, even the management team, they didn't have much confidence that is it possible that a lending infrastructure platform which provides both infra as well as data and analytics can be consumed on a click and start originating loans in less than a day probably. On the contrary, the existing players in the market, we know, you also know, Anilji, that you in the market, minimum 9 months to 12 months is required to onboard a new infrastructure player. That is the typical thumb rule, 9 months, 12 months. Here we are promising 1 day. That is the only thing. I mean, that is the first. Once that starts rolling, then we are in a different problem. Once that problem was solved. The second problem was that, like Raman said, now if every day some 5 lenders start signing up, I have to keep that infrastructure from my side ready. The analytics, the server backend, the service team, like you said, there are not all the customers are DIY, which means we have to handle. So all these things are the second set of challenges which we faced. And now we are dealing with the second wave of the problem. So that's our journey. I mean, I think I could answer the question. Yeah.
So, you are saying that right now the problem is all around the problem of plenty, and I think that's a good problem to have, right?
Yeah. So I will like to give it another twist. So one is problem of plenty, but at the same time, there are lenders who come up with different kind of requirements also. Like even last week we met a lender. He says that your pipeline origination, BRE, credit underwriting, those are all fun, but this is my customer segment. I need this 4 or 5 features because my customer is in this segment, for example, tied to this particular segment, let's say shopkeepers, right? And my segment wants this feature. I mean, you typically cannot pull a UN number or a PF number from NSDL APIs, and you cannot verify that. You need to have this kind of, then that's a question mark for us. I mean, now we have to go back in our SaaS product, we have to inbuilt that logic and we come back. The advantage is that once that is built in, all my lenders who are using that feature will have instant access of that feature. So 99% problems are solved. That 1% which is left, that question is coming back to us. And that is in turn helping us to keep on continuously improve the product built on that. And it's a continuous feedback and continuous improvement process. I mean, that's an excellent way of working in the ecosystem. I think that's it.
So are you saying that you are able to basically build your backend infrastructure as well as people based on the demand, or like it's of course it continues to be a challenge now, considering that there are so many people those who want to come on board?
Yeah, so absolutely. I would like to share one more insight, Anil. Last few days, I mean, you've seen last few months, I mean, like a lot of discussions around open chat GPT and open AI and stuff like that. Few of my lenders who are again mid and small size, they came back to us say that how can we leverage AI and analytics in our platform? I don't have a team. I don't have a tech team. I don't have anything. Do you guys in your platform give us this feature or this thing? So it was a question to us. I want to share to the viewers that we are already building in AI and LLM models and GPT models in our platform, which means the heavy lifting will be done by us, and the underwriting based on AI and GPT models will be consumed on pay-per use. So for example, 100 rupees, I will probably add 5 rupees more, and you can consume that GPT and AI models for your underwriting on the SaaS platform. So that's an input came from the customer. So we started building the product a year back probably. The AI models got launched 3 months back. So so that's the process of continuous innovation, right? So we are building in. All my lenders who are in my platform will get instant benefit. We will simply send a mailer to all the customers saying that this new features are added. Please start consuming. That's the simplicity of the SaaS. That's why SaaS is getting the center stage of all the product being used by the lenders. I mean, that's the power of delivery platform called SaaS.
Thanks. Actually, you brought in a new concept here, AI, ML, and of course, ChatGPT. Can you spill the beans around that? What exactly it will do as you offer it to the customer as through your SaaS spec?
Yeah, I would like to share one case. I mean, one example again, case study. Say, for example, a new to credit or a new to bank customer, absolutely no background, right? First time credit taker. Historical models, which is typically underwriting based on income, background, your credit history, that particular customer till date might not get a loan or not the amount of loan he was actually seeking, right? Once we are building in the LLM and the GPTs and the AI models, we can predict that this person who's first time coming and asking for a loan is a good customer and he will actually repay and he should get a loan. Now that modeling was not there initially. Now, based on these new AI ML models, which we are inbuilding, there is more than, I would say more than 100 million, I mean 10 crore customers additionally can take loans from the Indian credit ecosystem once these AI ML models are built in these platforms. Because these guys are underserved or they are not getting loans today. So once these models are built in, we can understand the customer more closely, we can predict their behavior, and based on that behavior, we can offer them. I request if Raman can add a few things here.
Yeah, sure. So, for example, what happened when a similar profile customer entered in the credit space 2 years back? Is he paid or not paid? If he paid, then it means this customer who is entering today with the same demographic will also pay, right? Because the same population behaved in same manner at 1.2 years back. So that prediction can happen through these models. That is one. Second, there are two types of data. One is the data which is private data, and second is an open data. That person who do not have any data, but some data is available outside in the public domain. That data will be picked and will help in the prediction that this is the socio-demographic profile of the customer, right? So the profile of socio-demographic profile will will created, and that profile will also help in. So these two data sciences, one is the similar profile happened, how he behaved. Second, the public data. These two combination will help lenders to underwrite this customer now.
That is very interesting, and I hope that this should solve some of the problems, at least for underwriting and the lender. So let me move to the third related part, because a lot of this is sorry. A lot of this is interrelated with the regulatory framework that we have, and you know that RBI has recently come out with guidelines around first loss default guarantee, or FLDG, or what they call it, DLG, digital lending default loss guarantee. And there's a huge market. In fact, there are estimates that by 2030 we should be able to do a kind of $1 trillion loan to digital lending, but probably fintechs will only cater to around 16% of it. So rest everything will be coming from the large industry player, typically regulated entities. So this is with the background, and we actually, you spoke about generative AI, that how you are going to utilize in your system. So that would be very interesting to see how it will work. Do you think that regulated entities, which are typically banks and NBFCs, they prefer to go with fintech versus investing in partnership, which they want to build directly with their own set of borrowers? Because this has impact on the business models of fintechs like you, those who are trying to not only provide technology, but you are trying to provide technology at a fraction of cost. But it's not necessarily that large regulated entities, they may still be interested in that type of situation.
Right. So one thing is clear, that the doors are open now from the regulator, that the people who are intent to do the origination and help the regulated entities with the loan, they are now can do that with the so that is there. So second question comes in, when that market will open, how those people who are intent to give loan now with that under those guidelines, how do they get the infrastructure, lending infrastructure? They can't build lending infrastructure overnight. Second, the market is already evolved, and a lot of data structures are available in the market, which can be consumed efficiently, and underwriting can be done more efficiently so that NPAs are lower. So these systems are already there. So market is already moved to that direction. Now, if today, just imagine anyone who wanted to work under those FLDG guidelines with the regulated entity, those fintech companies need not to create their own infrastructure. They just sign up on our platform and start underwriting. Their cost, so if somebody want to build a book of say 100 crore, he has to give, of course, 5% as per the guidelines, but he need not to build the system. If he's thinking that I will onboard say 10,000 customers, so he knows his total infra cost will be with us will be say 10 lakh rupees. So building a 100 crore portfolio, he can fix his cost and go to market will be immediate. So need not to build the system. So yeah, so one way RBI open up this. Second, company like us will help those potential fintech companies to take the infrastructure and start underwriting. And third, of course, the market will. I see the way market is going in. People are preferred to be a self-employed. So I see all the bankers, veterans, anyone who were related with the credit will be now open up and start doing their own underwriting. The infra and data solutions we will provide, and that is how I see.
I would like to add
for us.
Yeah. I would like to add one thing. Yeah. So see, the latest guidelines are excellent, fabulous, right? And the whole fintech community, we have warm heart. I mean, we have actually welcomed it, right? The advantage is that I said 1,200 lenders are there in India. So all these 1,200 lenders are anyway using platform, and they are slowly moving into platform like ours, right? Now, after this guideline, this 5% FLDG guideline recently given, see all the LSPs and who are part of this community, who are indirectly supporting the lenders, now they can also underwrite and push cases leads to the lender. The moment this guideline came out, apart from the 1,200 lenders which are there, 1 million, mark the numbers, 1 million, huge number, 1 million LSPs in India, they are also now our potential customers, because now they will be originating the loans, underwriting the loans, and after completing everything based on the BRE and the agreed credit policy with the lender, the lead will move to the lender's LMS or LOS, right? So all these 1 million LSPs are now my potential customer, because they will, like Raman said, they will never build their own infrastructure because their scale doesn't permit them. So it has to be a lending as a service or a banking as a service kind of a platform they need in a SaaS platform, which they'll be using. And I think our platform will be a perfect fit for these kind of LSPs, 1 million LSPs, who will be now working very closely with the lenders. I think that's where the fit comes in.
So basically, the new set of guidelines opens up new vistas for you.
Absolutely.
Because there are more people willing to do that. And I think it clears the air that what is that a fintech can do and what is that LSPs can do or cannot do. So I think it's a welcome change, at least from your perspective, and hopefully it should also help overall market so that people can get credit and probably at a lower rate, because that continues to be one of the major concern in this market. Moving on to next, you know that you have leveraged India stack to a great extent, and that has been one of the reasons why you are able to cut down that overall timeline. We also see a rise of account aggregator ecosystem in the market. We have several NBFCs; those are classified as account aggregator. We are seeing that some traction in the OCEN also, which is Open Credit Enablement Network. We are seeing traction around ONDC also. So how do you see that you will be able to add value or derive something out of these new, I would say, set of infrastructure that are taking roots in India and help more and more people avail the credit at in an efficient manner?
Right. So this is really the question actually very important for us. See, a lending infrastructure is like a railway line, right? It's a railway line, and account aggregator or say KYC verification, NSDL, all these who provide the data are the it's like trains, right? So we as an infrastructure have to work very closely with all these data providers. Now, account aggregator, for example, it's at the top of the funnel. When customer got onboarded on our platform, immediately we pull through account aggregator the data. This will help the underwriter or say a lender to see how much loan can be given, because the income data is coming at the top of the funnel. A customer who do not have any credit history, but of course have the banking account, that information which is coming through account aggregator will change the dynamics over the period of time. So a person who do not have any credit history, basis his income, can also be given some loan. You, at the start of the call, you mentioned about MSME sector. The MSME sector is the backbone of Indian economy. They are running business from generations. They are already have the bank accounts where the money is going in. Though they don't have probably taken the loan in the past. They are the self-sufficient businesses, but for expansion now, they all need some kind of a loan. How they will get the loan? They were new to credit. Now account aggregator is helping, and through our system, that information will flow in to the lender, and the lender will underwrite the loan application. So those are important. So and on the OCEN and OCEN network is, of course, it's playing a very pivot role. Similarly, we have created a platform. So is it like a lead provider is also empowered today, once he sign up on our platform, that he get connectivity to the multiple lenders on the go. So for a LSP, I'll say, once he sign up on the platform, once he get the entire system also, plus he get the connectivity of the lenders. So he can source the lead. That lead will go to the lender. Lender will underwrite the loan and give payback to some money as a payout to the lead provider. So that is also our system helping. So these all data providers and the multi support system within the ecosystem are linked on our platform, and it's important for us.
And you can do the same thing for ONDC also?
Yeah, for ONDC also. For ONDC also, for example, one fulfillment agency, he wanted to give a loan on their product. So once they get an order, they want to give an offer of a loan on the platform. So that fulfillment agency can become a LSP on our platform. They sign up as a LSP. Once they get any order of certain value, say 5,000 rupees, and they want to offer a loan product to that particular individual. So our system helps them to give offer to that borrower basis his data and his product buying through some lender who are already using our platform. So in this case, that fulfillment agency becomes the LSP. Yeah. Now the best part is he need not to fulfill the entire guidelines, because our system will take care of that. All the disclosure norms, all the policies of the lender who is offering the loan, and of course the borrower consent also, that our platform will take care. Yeah.
So thanks. Now I come to my last question, is that it's all about, because you are there as lending software as a service. So how do you see the future of SaaS in this space? And do you see there are only opportunities but no blind spot? To me, probably there are some challenges over there. So would you like to share your views that what are the challenges and opportunity for software as a service in this segment?
Right, right. So I'll take this. So ultimately, it's a constantly evolving space. The main challenge is that how the service or the platform provider keep themselves abreast of all the latest guidelines, requirements, and everything. That's it. That's the number one challenge. What we see as the future is that platform-based origination and underwriting and analytics is going to stay, because there's a huge adoption, and there are many platform players who are also migrating from on-premise to platform-based products. The only challenge is that how do you keep yourself updated, like I said, because lenders will be demanding in terms of good underwriting process, lower NPA, lower cost of acquisition, and everything. I mean, that be given. So as a leading lending as a service platform, we have to ensure that whatever guidelines are there, comes from time to time, government comes out with guidelines, those are incorporated in time. All the statistical models, the GPTs, the AI models, whichever is needed as a use case by the lenders, those are incorporated in time. And all the efficiency and the India stack, whatever development is happening, we quickly incorporate those in the platform. And I keep everything ready for consumption in the platform. That's the biggest challenge and the way forward. And the entities who are doing it, I'm sure it's a blue ocean, and there is nothing to stop. And the way credit market is growing, I think there's unlimited potential. I think that's what.
Yeah, you are right. You are right. It's a blue ocean, and it's a very large ocean. So many players can really play, because very large market, and there is a need actually for that. So I would have closed with this, but still I want to ask one more thing, because as Sunil mentioned that you were part of our FI lab, which is Financial Inclusion Lab, that we are running in India for last 4.5 years. So how has been your journey in the Financial Inclusion Lab, and what all did you gain, if any, from being part of FI lab? So I just want to hear from you what has been your take.
FI lab was really very helpful, and it happens at actually the very right time for us. And then so we of course got an exposure to see what is happening across, and that few days in CICO had actually, we learned a lot what is happening around, particularly in LMI segment, which we wanted to cater to broadly. And then of course the support of MSC. So we did some case studies also with MSC. Those outcomes are very helpful for us. So we designed did some modifications on the platform basis the feedback which is coming through those case studies done by MSC. They spoke to when you spoke to lenders also, and DSAs also. So that feedback was important. So FI Lab helped us two things. One, broadly bring us very closer to LMI segment and their problem areas, pain areas. Second, that how they will consume the information, those lenders will consume the information, those two things. And that is the base premises of our product. Yeah.
Thanks, Raman. Any pearl of wisdom for us, like because we have been doing acceleration, anything that can help budding entrepreneurs or say any other organization?
No, so I think it's one is that it is the hand holding is very good, very good. In fact, I would so the suggestion would be that probably it should happen more often now. So, so because it should not be restricted to 6-month program. It should be like beyond 6 months. It should be 1 year, 2 year kind of a horizon, because that is the time when startups are like building the product. When you are holding them at the time of building the product, the outcome will be very much closer to the market. So actual what is the required in the market. So yeah, so that is why we requested MSC to do one more case study for us. I hope that is in your knowledge. We requested the team to do one more study for us. So yeah, that is.
So in fact, this very nicely summarized, a very nice ask from you. In fact, based on this, we are trying to build the next version of lab, wherein we want to work with smaller number of startups, but for a longer duration. So I think it's a fair feedback that we have been receiving from you and others. So with that, again, thank you very much, Sudipto and Raman, for sparing your thought and time. And I know that you have been very busy and not only satisfying or say onboarding new customers, but also making sure that you have the right infrastructure and the people in the back end. So thank you, Sunil, for initiating this conversation, and back to you. Thank you very much.
Thank you
Thanks
so
a lot. Thanks a lot, Anil, for asking these questions, and thanks a lot, Raman and Sudipto, for answering these questions. I think I started with the point on credit gap, and I think with the kind of solutions that you are kind of bringing to the fore, I think over the next few years or so, we should see a rapid decline with companies like you. And then you spoke about your model and more specifically about how it can add more LSPs, and you talked about millions of LSPs which have a potential to sort of sign up onto your system. And I think that's really great to hear that. And I think with addition of AI and GPT into your SaaS offering, I think it will make all the more beneficial for LSPs, fintechs, and traditional lenders to lend to segments at a much lower cost. So thanks a lot for joining, and wishing you all the very best. Thank you very much.